here at EBA TV, we're going to be talking to Brian Stevenson and Kevin Brown of RBS, and we're going to be talking about the post-economic crisis world and, of course, risk. So, Brian, I mean, the market's going through some dramatic changes right at the moment. Low interest rates and a range of existing and new regulations, emerging technologies, and, of course, increased competition. I mean, to what extent can banks address these challenges in isolation, or is there a need to collaborate at an industry level?
In reality, there's a bit of both. So there's a need to cooperate about some of the issues that are happening in the industry. Equally, there's a need to compete more intensely at the front line, particularly around customers' needs. The changes are quite dramatic when you put them all together. So, for example, regulation is being tightening around the banks ever since the crisis. That has some general impacts on banks, but it has some very specific impacts on transaction banks, for example. And in general, banks have to get their capital structures and their liquidity structures right for the new world. That's generally individually done by the banks. In some other areas, for example, around security of the payments infrastructure, there's a lot more room for cooperation, for example.
Are there any other sort of key areas that you would like to touch on?
Well, certainly I think the constant fight against crime, if you like, within the banking system is an important area for cooperation between the banks and also between the law enforcement agencies, for example. So the tightening of regulations and attitudes towards the know your customer and anti-money laundering, for example, these are examples of where the whole system has to be secure and watertight. And that clearly gives an opportunity for the banks to cooperate together to make sure that they enforce appropriate regulation so the whole system is good. That's what our customers would expect of us. But it's also important that we cooperate equally with the law enforcement agencies, not just in a single country, but in a number of countries around the world, to make the system more secure as a whole.
Excellent. You know, financial crime, that's a big topic as well.
It is, of course, yeah. And many governments around the world are becoming increasingly concerned about web-based crime. Mm-hmm. And, of course, we now have a lot of web-based applications, particularly on money transfer, and we have to make sure they're secure.
I mean, Kevin, I wanted to move on to Basel III. I mean, you know, Basel III has been talked about as being very complex and very demanding. I mean, how supportive are you of this regulatory approach? I mean, what are you seeing as some of the key areas of impact on the transaction banking industry?
So we are supportive. I mean, it's a very prudent approach. There are a number of key impacts in terms of transaction banks, both in terms of the treatment of trade, the treatment of liquidity and how we handle intraday liquidity. And there are still areas that we're pushing back on in terms of ensuring that we don't have any unintended consequences, particularly around things like the treatment of correspondent banking balances, for example. But clearly the other concern for us is around the consistent application of Basel III principles as that rolls out globally. I mean, we've seen historically what happened with Basel II, and again for a global bank such as ourselves, where we're trying to give our clients a consistent proposition across the globe, the inconsistency of application does cause us concern.
So, I mean, you mentioned a little bit about intraday. I mean, what are some of the specific areas that you're focusing on right at the moment?
Particularly because the FSA has been, I think, at the forefront of implementation of some of the guidelines and principles in the UK, we've seen a particular focus on intraday. And here there are going to be additional requirements for banks, both in terms of reporting and management of their intraday positions. Now, we believe that there is opportunity here for banks to work together to make sure that we've got some common standards, particularly through SWIFT messaging. And we've been leading a group of around about 18 or 19 banks to help get some focus on the standards that we might need and the reporting that we might need, rather than each of us try and plough our own furrow and create our own bespoke reporting. And again, it's initiatives like this that we see as essential to making sure that, you know, we've got the right client proposition for the future.
Excellent. Thank you very much, both of you.